All right, everybody, welcome to Tesla Today. The big topic that everybody's trying to understand is what is happening to Tesla's stock. It seemed to have fallen over 20% in the last month, right after the Tesla earnings call. People are trying to understand what is causing this to drop. Is it because of continued price cuts in China, the concern by some institutional analysts? What's happening there? Is it the deflationary issue at China that's happening right now? And then also what's happening with Tesla's response to this? So we've got Jeff Lutz with us. Jeff is an ex-supply chain C-level executive. He used to work at Motorola, Google, and Lenovo. He's currently running his own consulting firm, and he's servicing these mega cap tech companies in supply chain design and manufacturing. So whenever it comes to this, he's also a long-term bull for Tesla, and he follows it quite closely. Thank you, Jeff. Tell me what's going on and teach me what's happening.
Yeah, great to be with you, Herbert. Let's get into it.
Let's get into it as always. And so right off the bat, let's set the stage. Here's what's happened to Tesla in the last month. So as of July 19th, that was when the Tesla earnings call happened. It fell from something like 298 or something like that to now 225. That's a significant drop. And if you look at what happened just in the last week, it also continued to fall from around the 250s to 225s. So it's continued to fall. But if you look at the 3-month mark, it basically was rising. We were all very excited. It was heading to the 300s. We were looking forward to the Giga Mexico. We're looking for Cybertruck. We're looking for the Highland. Things were looking great. And then after the earnings call, which I didn't think was that bad, things fell. Now, when I looked at this and I saw what happened to QQQ, this is what happened in the last week. It also fell from some 374 to 365. This is what happened last month. It also fell. 388 to 368, and this is what happened in 3 months. It rose and it fell. So it is in somewhat following a little bit of what the QQQ is, right? So tell me what you're seeing.
Yeah. So I mean, yes, there's definitely been a pullback, and the QQQs are a basket of some of the high runner tech stocks, and Tesla's index to that as well. So the Qs are down. The Nasdaq's down about, I don't know, depending on the day, 5 to 6%. Over that time period. Tesla's down 22 to 25%, I think, since it hit 299. That just leading into earnings. So Tesla's definitely got a higher beta than the Qs. Usually it's 1.5. So a beta is like, what do you multiply if the index is the Nasdaq or the Qs and they go down 6%? What do you multiply that index down to think like where Tesla should go? And usually it's about a 1.5. Sometimes it's a 2. So you take that 6% and multiply it by, say, 1.5. Maybe Tesla should be down 9 or 10%, but Tesla's down 22 to 25% since the earnings call. I mean, a couple of things have happened. I think it's a bit of a mixed bag. And again, I would tell people, none of this is financial advice. It's hard to call short-term moves. There's no like one absolute thing you can hang your hat on. But obviously, Zach Kirkhorn, that was an abrupt departure. It was really just about 10 or 11 days ago that occurred. So that's still pretty recent, and that's not insignificant. He was well liked by the street, and and possibly viewed as someone that's really driving the actual gross margin. One of the key members, I should say, driving the gross margin picture at Tesla, where there's a lot of sensitivity with analysts. So I mean, that's one thing that happened to Tesla that hasn't happened to some of these other mega cap companies. And I think there's obviously, I don't think people are going in reading Elon's Twitter and saying, I have to go push the sell button on Tesla. But I mean, obviously the conversations around, chasing around Zuckerberg and all these other different things, is it helping the stock price? Probably not. Do I think, again, like I said, I'm a realist. I don't know if people are going in and hitting the sell button. But I don't know what it's doing. I don't know what it's doing with institutions. I just know it's probably not a net positive. And then the other thing is, I think there's some missed opportunities of, there's a lot of dialogue on X, which is a great platform. It's a very interactive platform. There's a lot of dialogue on X, but if you were to like parse the dialogue and what's happening, a lot of it, at least from Elon's side, is around politics, which is fine. I have no problem. I'm not in the camp of Elon should say this and not that. He should say whatever he wants to say. But in terms of the Tesla stock movement, the amount of conversation that comes from him around Tesla, if there was a higher concentration of that, because he's so good when he talks about the company, he talks about what's happening with FSD, what's happening with AI, and how all these things could come together. I think that would be helpful because I think people are looking for that. The other missed opportunity is we're in the second half of the year, and there wasn't really a detailed update around kind of the whole pipeline of what's going on in energy. I think they're knocking it out of the park on energy if you look at the year-on-year growth. But what's that pipeline ahead? It looks like it's incredible. It looks like they're ramping up this factory. It looks amazing. It just seems like there may have been a missed opportunity to talk more about that in detail and discuss. When I say the pipeline, meaning like what's coming in as letters of intent for Tesla business, what's turning from letters of intent to orders. It's a very long sales pipe to ship energy. I think the final missed opportunity is I think Tesla, and I'll be a little bit critical. I think there's a couple of throwaway lines in the earnings deck about gross margins. I think Tesla does a whole lot more than the couple throwaway lines in terms of how they're driving their gross margins, how that they've. I mean, if I step back and look at it with my experience, I think they've actually stabilized the MSRP and gross margin curves, meaning I think they've actually caught up. And I actually sent that tweet out maybe in April or May, and Elon actually liked that tweet where I basically said like the COGS effort inside of Tesla, the cost of goods sold, the people that work on taking the cost down of components, making engineering changes, making factory changes. I think that effort is within basically a percent of the gross margin curve decline. I think they could talk a lot more about that because a lot of people are concerned about it.
Okay. What I like what you just said there was there's a lot of missed opportunities, which is the way you've kind of phrased it correctly. Because yeah, Elon's antics, not communicating well, all these wonderful things about to happen, but they're not communicating yet. It hasn't hit the street or the general retail investor. And so they're not communicating their story well. In the meantime, we're seeing the concern about the price cuts. We'll get into that. We'll see what the institutional investors will show some videos on that. And in general, this is just still very much driven by the market, it seems. Now, I'm kind of hesitant to show this next slide. I don't think it's useful, but it's kind of interesting because I mean, if you look at the average monthly stock market returns from 1980 to 2018, August and September are typically negative, while all the others were going up. And I don't know if this applies for this year, for this environment, everything that's happening, but to what extent is it just an August September malaise? Is it because of the concern about the interest rates, what's happening there? And then we'll talk about China deflation as well. But what's your comment on this?
Yeah. Yeah, no, it's a good chart, Herbert. I mean, a couple of things. One, the volumes are lower on the NASDAQ. They're lower on the Qs. They're lower on Tesla. Tesla usually runs, I think the 3-month average is somewhere around 130 million shares per day. And I think they're trading on some days in the 80s or 90s, maybe 100, 110. Definitely running 10, 15, 20% below or more than the 3-month average. So volumes are lighter. I wouldn't call them like everyone's gone kind of volumes. Like that would be like they're in half, or there's no news, there's nothing going on with the company, and it's very light. Tesla's a heavily traded stock, both in options and the common stock. So it is correct that August is down. August is down from an indice perspective in the markets. That is correct. But and if Tesla, on these lower volumes, if Tesla were to just drift down 5 to 10%, when the Qs are down 6 or so percent, 7%, 8%, if Tesla were to drift down 10, 12%, I don't think it would be as big of an issue. The fact that it's down 25% tells you that there's a little bit more to it. So a couple of the key technical factors are the 50-day and the 200-day. So Tesla's already crossed under the 50-day. I forgot that number off the top of my head, but they've already crossed well under it. I think it was either in the 230s or 240s. 221.91 is the 200-day moving average. And what you'd like to do is you'd like to see Tesla go down there, fill that gap, and just bounce off of it and just stabilize. Either have a day where it closes above that, a couple of days where it closes above the 200-day again. That would be good, because right now it's literally been 3 weeks of just, red day after red day. So technically you'd like to see it bounce off of the 221 level if it gets down there. So yes, August is seasonably lighter on volume. Traders are on vacation. People at these hedge funds and firms, there's people out. But I would say if you look at how much Tesla is down, if it was down, in line with the indices, maybe a little bit higher, it wouldn't be as much of a concern. But it's down a lot more.
Yeah. Yeah. Okay. So what I
Macro,
want to
Herbert,
do
you asked.
is,
Oh, sorry,
yep.
you had a question about macro. I
Mhm.
mean, so over that 3-week time period, we had a Fed meeting where they gave a decision on doing an immediate rate hike for July, and that was kind of baked in. There was over 90% believe that was going to happen going into the meeting.
Mhm.
But since then, a couple of things have happened. The jobs numbers were fairly strong. It's not showing a huge sign of weakening. The big thing is two big things have happened, and actually in the last couple of days, or since that period. One is the CPI came in, I think, last week, and it wasn't super hot. It wasn't super cold.
Mhm.
The PPI was a little bit higher, but not super hot. It was fine. But industrial production was 3 times higher than planned in July. So that's like, okay, what's going on? Like the economy's going crazy. And then the Atlanta Fed, which does these GDP now predictions, they're predicting the GDP in this quarter to be 5.8. And their predictions are pretty solid when you get into the second half of the quarter, which we're kind of at the midway point. I mean, maybe it's going to be over 5%. But the point is that's a very hot GDP. That's showing the economy's heating up. And so
Yeah.
now what traders are putting together is like, is the Fed going to have to slow this down even
Sure.
further? Is it higher for longer? So next week we have the Fed meeting in Jackson Hole, and then you've got the a Fed decision coming in September. And right now I didn't look at this morning's numbers, but I think as of a day or two ago, it was like 90% that they're going to pause, and they may still pause. But the industrial production numbers and this Atlanta Fed prediction of 5.8% GDP is raising some eyebrows.
Yeah, okay, sure. But like we will report shortly here, China is in deflation, big time deflation. The Fed
Yep.
cannot pause. They need to you need to pivot now. We'll talk about that shortly. But okay, so lots of different organizations are looking at Tesla in different ways. So let's go look at how institutions are looking at this, and then I'd like to also show how that institutions, some large firms, are buying Tesla at this point too. So it's kind of like this mixed bag of what's happening. Some people get it and some people don't. So here's Gary Black, and for many of us, he represents what institutions are thinking. He's been saying that it's really about these, the price cuts. Whenever Tesla does these price cuts, even though if it's small, it spooks them because they think that, oh, they're not done with price cuts yet. Therefore, margins will fall. Therefore, earnings would fall. Therefore, their future, discounted cash flow models all get screwed up, and they want to lower their price targets. So he said that the China prices that Tesla just did on the Model S, 7,300, and the Model Y in China for Model X, 8,500. That they sell 2,000 of these M&S and Model S's and MX per quarter. So it's very little, but it still spooked them apparently. So here's the impact: very little, 1.5 cents a share, but yet this is just the fact that they did this was enough. So let's go watch what Jim Cramer says, and then we'll see what Dan Ives says.
Tommy.
Hey, booyah, Jim. Hey,
Booyah.
I just want to tell you first, you nailed it in the early summer with the Tesla chart you put up and recommended it. I went to the moon with it, got out high, 280.
Oh, well done. Well done.
Yeah, I got lucky, I guess. But anyway, I didn't exercise what you preached, and I tried chasing it back when it dropped back to. I got completely out at 280, got back in at 260. Now I'm bleeding to death, wanting to know whether I should get out or hold on to it.
Well, there's a lot of bad news right now about price cuts. Tesla seems to be cutting price. And as long as they're doing that, it is going to go down. I do not hear them saying we're done cutting costs. So it is difficult for me to opine and think positively about Tesla for the very moment, because I got to tell you, if you keep taking down your price, you're certainly not going to be able to make the earnings estimates that are out there. Now, if you already own the automakers, don't panic. I think most of the bad news is already baked in. The UAW can only push so hard before the White House is likely to step in and force a compromise. Much more made money at it. Time.
Okay, so he said, "Oh, Tesla cutting prices. Says, watch out." Then he goes, "Oh, but who cares about the UAW negotiation? Don't worry about that. That's already baked in for GM and Ford." Okay, sure. Oh God, did you want to react to that first? What he's thinking?
Yeah, and starting with Gary's tweet, Gary commented on the S and X, a couple hundred of cars. He also had a great tweet about the Model Y price cuts in China, and even that, it was on the 2 lower volume trims that they ship in China, which is about 18% of China volume, but that's only 6% of US volume. And I'll talk through that in a minute. I went through the math on that, and it basically comes out to globally $116 per car that Tesla ships. If you think they're going to ship somewhere between 470K and 500K, it's about $115 per car. Tesla is going to drive COGS, 20 times that. Cost reductions 20 times that. So you have to put these things into perspective, and that's why I sent this tweet out. First bullet point is basically, I think in Q2, that was kind of where Tesla crossed the Rubicon of like their COGS reductions, their cost reductions in their factories, at their suppliers, their cost to make the car. I believe that they've caught up to the MSRP reductions that Elon has been, directing on the sales side. And I even sent a tweet out about that, a separate tweet, and Elon liked it. And that's a couple months ago. And then, in the second bullet, I kind of go through, it's 18% of that volume in China, which is 6% globally, which is, 160, it's a just over $100 per car we're talking about. And I believe, just from my experience, Tesla is driving probably on the order of 20 to 30 times that in COGS reductions. Are they going to get all those, to come to the bottom line? No, but they'll get a big portion of that number. So they're driving thousands of dollars out of the models, and these price cuts so far, we're already halfway through the quarter, just over 100. Now Q3 is going to be tricky because they're going to be down for a couple of weeks doing these upgrades, so they're going to be draining their inventory. When was the inventory built? The inventory was built in the prior quarter. So that'll be at that COG structure. So I think Q3 is going to be a little bit tricky, but the point is directionally, they're driving COGS reductions now in excess of the price decline curve, the MSRP decline curve, in my opinion. And knowing the magnitudes of what they're driving in cost reductions, what they did with the Model Y in China, what they did with the Model S and X is minuscule. I don't think the street is picking up on that, but if you understand what they're doing, what we're going through and the math we're going through now, you'll see that they're actually going to be in a much better position. Again, unless they do more dramatic price reductions between now and the end of the quarter, then we have to go back and reanalyze it.
Okay, let's look at it. One more analyst, Dan Ives. He's obviously a Tesla bull, so at least not all of them are reacting the way some are. Let's watch what he said.
Been very right, but I will note that Tesla kind of quietly is down 20% in 1 month. They just cut car prices again in China. Are you concerned? Do you still remain bullish?
We remain firmly bullish. I mean, I view this as more of a sell-off post-quarter, worries about China. But Brian, me and you've talked about this. They're cutting prices, going for volumes. That's the right strategic poker move for Musk and Tesla. I think it continues to really be a land grab opportunity for them. And I view this as an opportunity. I think as we go into the rest of the year, demand will be firm going into next year, especially with Cybertruck. I think it's a table pounder at these levels.
Table pounder at these levels. There you go. Well, if you like Tesla before, you just got a 20% discount.
Thank you. Okay, that's one other perspective. What was your thoughts?
Yeah, these analysts, they don't, and on these TV shows, they don't have time other than to say that people are worried about Tesla's cutting price, and people are worried about price cuts and gross margins. But if you spent like literally the 90 seconds we spent going through the numbers, and then talk to somebody who actually understands supply chain, supply side, COGS, that's the problem that's missing in the street. I don't see anybody actually doing a very good job of modeling COGS reductions. Somebody goes back and looks and says, what was COGS in the prior quarter? And they just take that math and they carry it forward to the next quarter. But in the supply base, Tesla has their hand out to all their suppliers every quarter saying, look, I'm taking my volumes up. I've kept your factories running. What can you give me in efficiencies quarter on quarter? I know you're getting more efficient. I know your yields are getting better. I know you're getting more efficient with labor. What can you give back to me? Tesla is doing the same thing inside of their factories, but that's not a very sexy thing to talk about on TV. And so what you'll hear are price cuts. People are worried. Stock sells off. And it's one of these quarters, Tesla's going to set up for a very big surprise on gross margins. I've said this now for the last couple of months. I don't know if it's going to be this quarter again with them selling out of it, selling inventory down and with the factories down, but it could be either this quarter or next quarter. I think they're going to surprise.
All right. So you think that they will surprise, which is great. I'm loving to hear you say that. But let's just go back again to these concerns by some of the folks. So Roland responded back to Gary saying that actually the exact numbers for the Model S and X imports in China, we don't have July yet. They're this much, the 471 plus March, April, May. Yeah. So it's, you add them up, but a couple thousand. That's correct.
Well,
maybe a little bit more. Mm-hmm.
Well, that'd be every car. That's everything they've shipped. They've obviously sold cars. So the point is they're doing inventory. They're doing this price reduction on inventory. It's probably hundreds of cars, maybe 1,000 cars. It's not everything that's shipped.
It's not every car. Okay.
Yeah. So anyway, that's the point. I mean, when you extrapolate that over the shipping volume of the quarter, inventory price reductions or these two select trims in China, when you extrapolate that over the 470K that they're going to ship maybe in the quarter, it's not a big number. It's $100, just over $100 per car in the case of the Model Y example.
Okay, so Brad mentioned Motorhead is a well-known Tesla Q, very much a bear. So here's his point. He said, yesterday, Tesla cut 2 trims of their Model Y by $22,000. Today, we have a $10,000 price cut for the Model S and X in North America. Delivery growth now more important than earnings. Yeah, we've been doing this for a long time, but these are tiny cuts. Sure, we want delivery growth. But then he says this, in Q2, Tesla's pre-tax margin, X the credits, ranked 7th after Honda. So this is you told me this is the operating margin, not the auto gross margin, but the Tesla's actually only at 11 point something percent. I can't see it, but right there, that red. So yeah, but you said that will change. You think after Q3 that will change? Might surprise. What are you thinking?
Yeah, I mean, Tesla said that they are focused on, this view of basically operating margin or pre-tax EBIT margin. That's the view that Tesla says they're focused on. The street wants to still see gross margins, but even if you look at that, let's see if you give Tesla that and say, okay, great, they're focused on this view of margins. They're not. They're off that throne of being the industry leading gross margins. Toyota, Stellantis, in that case, Mercedes-Benz are all ahead of them in operating margins. So I hope Tesla, again, there's the autonomy story. It's coming. I get it. That's the higher order bit. Totally understood. But there's no reason, given the way Tesla designs their cars from a simplicity perspective and the way that they drive their cost reductions, there's no reason why they can't regain that again. And we need some stability in pricing. So again, I think it is important to keep those hardware margins. It's important to keep those hardware margins strong and not just let them further deteriorate. So I hope again that there's some bottoming in Q2. Maybe it spills over into Q3 because we're shipping some inventory units from Q2, and this starts moving up in the right direction. And again, you talk about missed opportunities. I know Tesla can't come out and explicitly say that, but they had a couple of lines in there about what they're driving in gross margin improvements. I wish they would spend more time on that to give the street a little bit of a, all right, they got it. I think, I wish they actually would have been a little bit more explicit of like, we think our COGS reductions are ahead of our pricing reductions. And they could say like, look, that could change based on what we see in our sales data coming up. But right now we believe that's where we believe we are. I wish they would have said that. I think that would have calmed the street down a bit.
Hey there, thank you for joining me. If you can, please consider supporting this channel so I can keep it going. It's a lot of work arranging all these amazing interviews. One of the easiest ways is just to click that join button and become a member of the channel. Thank you very much, and let's get brighter. Yeah, I mean, like what you're saying, that because they don't communicate well, these small little things like this, they're tiny, take an oversized reaction. People freak out about it. I like two of your tweets that you then replied saying, this one, which is, by all means, you're being sarcastic. Continue selling the stock off for inventory discounts on just a few hundred cars. Yeah, who cares? We're about to hit the launch of Cybertruck, the Model 3 Highland on January 1st. There's going to be the credits, the IRA credits hitting directly, instant credit point of sale. Then you also said, there's a psychology here to see people freaking out about very small Tesla price cuts on selective models, but they're not considering they're taking costs out of a similar pace as demonstrated in Q2, if not faster, while investing in these crazy R&D efforts for future growth. So this is all happening in the backdrop of the bot and multiple redesign gigafactories, expansion of gigafactories, energy, autonomy about to be resolved, and $1 billion being spent on AI and so forth. But let's focus on the price cuts.
Yeah, and the point out, the kind of the big point I was trying to make here is Tesla's doing some selective price reductions on inventory vehicles, or a few percent of the models, like example, the 18% of the shipping volume on the Model Y in China. But their COGS reduction efforts, their cost reduction efforts, again, suppliers, factories, engineering actions, Tom Zhu Gigafactory actions, those are happening across all the models they build, all 470,000. If we go at that number for the quarter, all of them are going to be driving COGS reductions on all of them. Some they're going to have more success than others. But if you take the select MSRP reductions that have happened, these aren't like the MSRP reductions in January. In January, you're taking a Model Y down from the prior year it was in $60-some thousand, and you're taking it down $12,000. That is hard to catch up to in one quarter. Okay, so the point is big MSRP reduction in Q1, smaller MSRP reduction in Q2, bigger COGS reduction in Q2 that kind of catches it and meets it, and now in Q3 these are very, very small reductions on the sales side. The COGS reduction are they're just going to continue.
I said, yeah, okay. Let's switch the conversation back to the macro again and the economy. So we've already just said these things are small, but the big things that are happening is the interest rates, what you just said earlier, and China. So this is Kathy Wood talking about this, and she's explaining that China is in deflation. And when China's in deflation, they're exporting that deflation to the world. And she's basically saying that people are not appreciating this. So if all else equal, the 15% depreciation in the yuan relative to the dollar should have increased its PPI inflation rate by 15%. Instead, it dropped by 4%. So in other words, the deflationary vortex is approaching 20% because it's catching up. The defaults in China real estate and trust companies. And then she explained that after China entered the World Trade Organization in 2001, their GDP grew at double-digit rate for nearly 20 years. But that can cover many economic sins. Excessive debt, associated leverage, these excesses are surfacing in China now. So she's warning this is happening. And then she said that China probably wants to limit, if not stop, the depreciation in the yuan. To do so, it could be selling the US dollars that it has and buying the yuan, effectively tightening its monetary policy, exacerbating the economy's weakness even as it is easing. So she says, in our view, the Fed has precipitated and exacerbated the risk of a global deflationary bust. The impact of its record-breaking 22-fold increase in the Fed funds rate could be hitting China first, spreading to the rest of the world. So what the U.S. does impacts China, and what happens in China is going to impact the U.S. So she's warning that we're going to get into deflation. So then Elon replied, said, interesting. So this is a big deal, right? Jeff, what do you think?
Yeah, the China PPI numbers have been negative for a couple months in a row. So they're in deflationary territory. That means basically, instead of the rate of pricing, what's happening in the U.S. right now with U.S. PPI is the rate of producer price increases are still going up. They're just going up at a smaller rate. That's more in line with the targeted rates we would want to be at. What's happening in China is they actually have negative PPI. That means there's actually a reduction in that producer price from the prior month to the next month. So they're actually in a deflationary category. And when that accelerates, that could portend a number of bad things, obviously, for the economy if they can't get basically they put all that effort in from a production perspective, and the output of what they're getting in terms of pricing for those commodities declines, then that creates another bad spiral. So this is a problem, and this is an issue, and I'm sure the Fed has this under consideration. But the Fed, their first mandate is around price stability, again in the U.S. and our markets, and then in employment. And of course, they're keeping an eye on what's going on with what's going on globally, but. And this is a factor. But the other thing that Kathy left out of her note that I think is important, from pre-COVID to now, much of the world has moved away from China as a source of production, and it's rather significant. Is it 50%? No. But China exports are actually down. They're net down. And you look at our industrial production was up three times higher than it was predicted to be in July. So there's a lot of sourcing that's occurring now out of neighboring countries, Vietnam, India, Thailand, Indonesia, and so forth. And there's product that's moved over the last couple of years due to China's kind of restrictive policies, how they manage COVID, what's going on with the geopolitical issues, both with their border with India and with Taiwan. And again, I work with companies in the space as well, but there's definitely been a shift. There's still a home base in China for production in Asia, but companies have shifted a large percentage of their production. Actually, it's not just a couple of percent. They've shifted a lot of production out of China. Again, India, Thailand, Vietnam, Indonesia.
Okay. Well, so I guess my point is that when China goes deflation, the global is infected. So more likely, the Fed will at some point have to do more than just pause. They'll have to pivot. And I think this is good news for Tesla. It means that, imagine what Tesla's happened to the stock and its sales during this massive recession, the macro environment. Well, now we're flipping back to a boom market, or at least the interest rates need to start getting cut. And if interest rates are cut, people can afford a little bit better than they can the financing. And we'll cover that a little bit. So yeah, why don't I share that a little bit here? So just another news that happened just now, which is Tesla had to increase their APR percentage for financing. So for people with excellent credit rating, 72 months, it went from 6.09 to 6.19%. So they're increasing the prices. And you told me that's because they're reacting to the increase that happened 2 weeks ago by the Fed. So, while they're trying to cut prices, they have to increase prices through the financing.
Yeah, I mean, the banks are the banks have to set these higher rates. When the Fed funds rate goes up, it basically raises the floor. So yeah, Tesla has to respond every time they raise rates. And there's things that they could do but in general they have to respond to that. One quick point going back to the China PPI. Another thing that just kind of fits all these topics together we were talking about. The China PPI, their producer price index, they had a couple of months of like 2, 3, 5% declines in producer price. And it just goes in, like, if that's actually happening, that means the input costs in Shanghai and anything that we source out of China for the US or Berlin, those input costs are coming down a much greater percentage than this $116 per car that we're doing. So just that China PPI deflation, that's a big number that's going in. That's without Tesla having to do any work. That's not even having to ask suppliers. That's not even having, those input commodity prices are coming down. You got to watch labor though in that, but anyway, it just
Right.
kind of ties all those topics together.
Yeah. So again, it could be good news for Tesla, and then all of a sudden it's bad news if the economy just totally tumbles out of the thing. But okay, so just another thing to share here is that institutions are buying. So here's the latest information from Tesla Bull. Tesla hostile takeover is coming by institutions. So Vanguard and BlackRock and many other institutions are loading up retail capitulation. So as the stock falls, the institutions are buying. You can see here that the large scale orders in the last 5 days, it's been just, pretty significant. That's the green. The green is the medium size folks buying at medium and large buying. Yeah. So they're still buying, of course. They'll just keep buying, right?
Yeah, it's a mixed bag. There's like David Tepper, he flipped out of Tesla in Q2. I mean, that was a big move inter-quarter to go from 150 to basically $300. So I think institutions got in and got out too, but there's some that were adding, there's some that were taking off. The one thing I will tell you is a lot of institutions stuck or kind of sticky with NVIDIA, Microsoft, AMD because of the AI story. That AI story has stuck to those names. It hasn't stuck to Tesla yet. Tesla's work, obviously, we know what Tesla is doing, and as Tesla bulls, we analyze and we study this every day. But I don't think that that Tesla as an AI company that is stuck yet with with these hedge funds and with these big money managers yet. But hopefully in time it will.
Yeah, it's back to what you said at the beginning. Missed opportunities. So many good things are happening for Tesla, but small little things like a price cut is going to freak everybody out. But there's all these big things, the stories that they can explain. I'm sure it'll come together. It'll all happen. And then there'll be a huge surprise and everything will start moving forward. So thank you, Jeff. That was wonderful. Thanks for teaching me. Thanks, everybody. Follow Jeff
great
on
to be with you,
Twitter at the Jeff Lutz. And he's a supply chain executive. He's kind of follows the stock market quite closely. So you should follow him on Twitter to get those kinds of information. As you can see, I share a lot of his tweets because there's a lot of very interesting and informative information that he shares all the time. Thank you, Jeff. Thanks, everybody. Bye.
Thanks, Herbert.